Hello and welcome to Crux Investor. We caught up earlier today with Chris Doornbos. He's the CEO of E3 Metals. We talked to him about their DLE technology producing lithium. We look at their Livent JV, also their recent PEA results and what it could mean to them going forward. The share price has shot up, so we discussed that. But if you want our thoughts and opinions on all of those topics, plus the company itself, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis, which you may find interesting. There are summaries of other interviews that we've done to save you some time, plus training courses to help you with your diligence process, commentary from experts from around the world on a variety of companies and commodities. Truly fascinating, and a thriving community of investors sharing their thoughts and ideas with each other in a nice, safe, friendly environment, free from trolling and abuse. And if that sounds nice to you, and it should, go and join them at cruxinvestor.com/club. And we'd love your feedback too. So do give us a like, be much appreciated. Leave your thoughts below. We'll get back to absolutely everyone. And of course, if you want to see precisely what we talked about, do take a look in the description below. Chris, how you doing, sir?
Very good. How about yourself?
Not too bad, not too bad. Where in the world are you?
I'm in Calgary, Alberta right now.
Calgary, Alberta. Are those pictures of Alberta or the project behind you? What's the significance?
Those are pictures of our project site, in Alberta.
Okay, yeah, I was doing a bit of research about what you guys do. I suspect there's going to be a lot of green images because I think you've kind of got a very, very big. The bit I really was drawn to was this kind of zero carbon component, because in the context of EV thematic and battery metals, you kind of need to. The whole supply chain just needs to be able to deliver on that, doesn't it?
I think it's a very important part of any lithium or any product going into electric vehicles. It's going to become even more important in the future.
Yeah. So tell me a little bit about you, if you don't mind. So what's your background?
I'm a professional geologist and sort of specialized in major project building and development throughout my career.
Such as?
Worked on a project here in Alberta called Fort Hills, which is about a $17 billion capital build. That's probably the biggest project. Worked in Australia and Sweden on smaller copper, lead, zinc sort of projects. Came back to Canada in 2015 to start effectively E3 Metals.
Right.
So I've been working in the lithium space since 2015.
Right. Okay. Fantastic. Appreciate that. You better give us a quick overview of the business as well before we kind of dive into some of the topics I want to go through today.
Yeah, absolutely. So E3 Metals is a lithium development company based here in Alberta. Our project is just north of Calgary. And we're developing a DLE, direct lithium extraction process methodology as well. We've got one of the world's largest lithium resources. Lots of room to expand, lots of room to grow this project. We've recently put out a PEA that outlined about 20,000 tons with a value of about $820 million US dollars after tax. That's just the starting point of where this project can grow. Of course, it is a PEA, so we're still in the development phases. And we're aiming for zero carbon lithium products coming out of the back of our plant. So very exciting story here.
No, it really is. And I think people are just latching onto it. And I think lithium's been on a little bit of a run the last 3-4 months, okay? Your share price has followed suit. You're up about 4 times since Christmas. Were you expecting that?
I think that E3 has been under the radar and a bit undervalued for quite a long time. And the recent release of our PEA has, I think, really put us into the, in the wave of lithium companies that are on the path to lithium production.
Right.
And given that, and the PEA sort of solidified us there. And it took a lot of energy and effort for the company to get to the PEA stage. But now that we're there, we're accelerating very, very fast towards production. So, and I think that this is just us catching up to that where we should have been several years ago in terms of value.
Okay. I would have been disappointed if you didn't tell me you were still undervalued. As a CEO, that's your job, right?
I mean, it's number one thing you have to say, absolutely. But it is true. Like when you look at our peers, we still have a long runway to go relative to even the smaller peers in the space. So
right, okay. And I noticed a page in your the PowerPoint where you do some peer analysis for people reading on. Okay, well, look, I think what's really important for you, especially in the lithium space, is for people to try and understand the vocabulary, the terminology. Okay, I think people understand what lithium hard rock is. a lot of it around. Some of the biggest producers in the world, hard rock. People understand brine. They associate that with lowest cost producing for lithium. What they don't understand so much, lithium clays and direct lithium extraction just sounds awfully hard. And you're a DLE company. Do you want to explain what that is?
Direct lithium extraction is effectively just removing the lithium from the brine directly. So as the name suggests, so there's no evaporation, there's no mining involved. It's a chemical process that extracts lithium out of the brine. The benefit to it is that, and what we've developed specifically is it's engineered for purity. So we just remove lithium. We get very little other impurities in our concentrate, what we call our LIC solution. And that is incredibly important because if you're going to sell your product into the battery market and not into the industrial lithium market, purity is number one, absolutely number one metric by which you will be paid for and valued upon. So for us, we go a long way. We remove 99% of the impurities in the single step. We also concentrate it. And the concentration was where we started. That was the first goal, because that's what mining does. That's what salars do. They both concentrate the lithium, so it makes it easier to process. But what we found is we're, aside from also being able to concentrate, we're also able to purify it. And that is something that is one of the larger steps if you're a hard rock mine or you're a salar, because you concentrate everything, not just the lithium. So then you have to clean up all the other elements and get to a pure lithium product. And that's a very expensive and time-consuming process. As on top of the mining operation or the waiting for the sun to evaporate your brine. So for us, time is obviously time value of money is very important. So this happens, the reaction happens in less than 15 minutes. So we're getting the lithium out very quickly. We're able to produce a product within the day rather than within in a Solaris example, sort of 12 to 24 months.
Right. You make it sound really simple, and I get the benefits, and they're great benefits. But people have been talking about delivering direct lithium extraction for a long time. Not too many people are capable of doing it. Lithium is a more technical commodity compared to, say, extracting, copper or nickel or gold out of the ground. And DLE is, I guess, lagging in the sense that people don't understand or haven't understood how to use it in the way that you're describing it. How long has it taken you to actually get a technical solution which works on an economic scale?
Yeah, I mean, DLE is a very simple process. It's a water softener. It's an ion exchange process. Ours at least is anyway. And a water softener is as simple as you have a little pellet in a tank and you flow the water over that pellet and the calcium in your hard water sticks to the bead. That's as simple as the process is. It's just new for lithium. So with anything new, it just takes time to, and I mean, it's the story for electric vehicles as well, and the lithium ion battery more specifically, the technology took time to perfect. And once it was there, now we're going to see this exponential growth in the sales of electric vehicles because the technology is now there that makes it possible. And I think the same is going to happen with DLE. The technology is now becoming a lot more common. We're not the only ones developing a similar process, not the same, but somewhat similar to our peers in the space. And what that does is it adds confidence, I think, for investors, but also the process itself is becoming more understood. There's more experts that know how to put these things into production. And in my opinion, in 10 years, most of the lithium in the world, most of the new lithium coming on stream in the world will be out of a DLE process in some way, shape, or form. So
let's talk about it though. Who's doing it economically today? Where should the market get the confidence from?
Right now, the leader in a new project, real DLE extraction, is Standard Lithium. They're piloting their process in Arkansas. So it's a good proxy. We're going to be piloting within hopefully the next 12 months. So, when you look at them as a comparison for us, I think it's a good spot. Even the big companies like Livent, they've been using a version of DLE, not the same system or the same way that we use DLE, but they've been using DLE for a very long time.
So, we interviewed Standard, and they've got the Lanxess partnership there, the 70-30 split, I think. and their market cap is, what are they, over 500 million now, something like that?
Something like that.
So they aren't being rewarded by the market, but you said the words yourself. It's still a pilot plant phase. So they still have a ways to go themselves in terms of being able to prove proper economic development. Are you going to be able to kind of shortcut that process? Because you're a little bit behind them at the moment. So where are you today compared to them?
Yeah, we've just opened up a facility here in Calgary to design and build the pilot. And so that is when we're hiring a bunch of local process engineers who understand. I mean, this is just liquid solid separation, so that's very common processing methodology. So we're building that team, and then we're building that pilot this year. So that is the goal for the technology development. But once the technology is sort of past that hurdle and is piloted, the rest of the processes are very, very common, very much stock standard. So this is something that we obviously have spent the past 3 years focusing on, and have sort of crossed that technical threshold. We know we can take lithium out of the brine. We know how to make this material. We know how to put this into practice. We just have to demonstrate it at scale now.
Well,
so that's
absolutely it. You do need to demonstrate it at scale through the pilot plant. And so, how long is that process, and how do you better understand the economics through that process?
Yeah, it's with DLE and ion exchange, it's actually fairly straightforward. And that's one of the benefits of it. It scales very linearly. And what that really means is that we're going to have a tank. That tank's going to have our material our solid chemical that we've developed that takes the lithium out of the brine. And you're going to flow brine into that tank, and the lithium sticks to that material. And by the time it reaches the bottom of the tank, there's no more lithium. So in a commercial scenario, we'll start with the pilot. In a pilot scenario, we're going to build a tank, right? That's going to be of commercial size, but we're just going to build one. And we're going to deploy it to the field, and we're going to demonstrate that it has the capacity to extract X amount of lithium on a daily, weekly, yearly basis. Then when we want to put that into commercial practice, we just build X number of those tanks to match our commercial production threshold. So that's when I talk about it scaling linearly, the risk really is that one tank working at that size. Once we demonstrate that with the pilot, the commercial scale on this particular piece of technology is much smaller in terms of the risk profile, right? Because you've already demonstrated the process system and the process methodology at commercial scale, but you've just done one unit operation of it.
Right. Okay. But so explain that to me, because it doesn't sound like a very capital intensive pilot phase, because you're saying because you just have a whole bunch of tanks, typically you just need to use one.
Yeah.
They all work alone. So how much money, how much time, what's the process, that development phase?
Yeah, we're estimating somewhere between 3 to 4 million Canadian to build and operate the pilot. So it isn't a very expensive job. It's not going to be big. It's going to be one tank. But the benefit is that, it is, you can replicate that process very easily. So one tank should be enough.
That's interesting, because if you look at some of the brine companies that we've been speaking to, obviously it feels like you're cheating in a way, because their pilot phases are costing 15, 20, 30 million bucks. So wow, 3 to 4 million, incredible.
And they're approaching it slightly differently. Like Standard's building almost a demonstration facility, not so much a pilot. And we might go to that stage after the DLE is piloted. We might bring in the lithium hydroxide production unit operator and bring that out to the field as well to demonstrate that. But all we're demonstrating is known technology at that point. And I think the risk hurdle for us and any DLE company is demonstrating the process, the DLE process itself, because that's in terms of commercial operations, as you pointed out, that's what needs to be demonstrated. That is the linchpin between what we do on the oil and gas side, which is produce fluids from aquifers, which is what we do every day in Alberta, and then the lithium hydroxide production, which is very common in the lithium industry, using very similar operations that we're going to use very similar operations to what's already out there. So our technology really does link two very common tech and processes together.
Okay, so common's a good word. I like that. Because you've been at this for 5 years. You're a big project guy, right? I get that. Who have you surrounded yourself with? Because I noticed a headline recently, Livent opting out or choosing to opt out for, well, you can tell me why in a second. Who around you is giving you that technical confidence? Or is it because most of the technology is relatively common?
Yeah, I mean, we have our own technical team. That technical team was built through the engagement with Livent. So, that agreement was signed in sort of mid 2019. If you were in the lithium space in 2019, it was very, very difficult to raise capital. So, we did a deal with Livent that was really great for us. They brought in their expertise, they brought in capital to the project, and they helped us de-risk the big risk hurdle at the time, which is, demonstrating this DLE technology. So they exited in late November. What Paul said to me was that it was due to capital constraints in their new project in Nemaska. My guess is it was probably more with the technical expertise, because we were using some of their best people to help us develop the process, and they became responsible for that with Nemaska. But in the meantime, we've developed our own skill set. We have our own technical people. We have a team of people that is now operating this facility here in Calgary, looking to demonstrate and build this pilot. So, that we have surrounded ourselves in this company with those technical expertise, and we're still growing that team. We just brought in a new gentleman yesterday and added to the team. So that team is continually growing. I mean, we just completed an aggregate total of about $14.5 million worth of fundraising over the past 4 months. So that also opens up a lot of opportunity, because what Livent brought to the table at the end of the day was just people, right? They brought expertise to help us out. And the benefit to E3 is we got all that early expertise when we needed it at no cost to the company, because when the agreement demonstrated when they walked away from everything. They walked away from any IP. They walked away from any ownership in E3. Everything was left the table. So we got about $2.2 million, sort of almost like you could view it as a grant. We got technical expertise and capital, and didn't have to give anything for it.
It's interesting. It was kind of feels like it was the right deal for you at the time. I think what you're saying is where you've got to perhaps you feel a little bit more confident in your own ability to deliver this. Now it's a $600 million CapEx project. Are you going to try and do that alone, or do you think you're going to look for another partner?
We are talking to some other strategics to help us, build the project. But the conversation is a lot different now than it was with Livent. The conversation is now about that $600 million and how we're going to fund that, rather than how we're going to advance the DLE technology. And so the partners are different in that sense that we're talking to. At the end of the day, we build projects like this in Alberta. The project I worked on here locally was $17 billion, right? Like, it was a big capital project, very capital intensive in terms of people and energy to get that project off the ground. And ours is a whole paradigm smaller than that. It's 20 times smaller than that project. So, the ability here for Alberta to build this is in the province. We don't have to go outside to bring expertise in. Everything from highly skilled welders to professional engineers that know how to build a project like this are here in the province. And so we know how to do this. And regardless as if we bring a partner in or not, I have a lot of confidence that E3 has the ability to build it. So the next question will be, how are we going to fund $600 million? And there's lots of avenues out there, and I think having an ESG component to this that is very strong, and we're going to back that up with a LCA, a life cycle analysis done by a third party to demonstrate how strong our ESG side of this story actually is. I think that is going to be a source of funding for us, because there's a lot of movement towards funding ESG focused projects, especially when it comes to the battery metal space. I think we're at a point now where EVs are solidified, the lithium battery is solidified as what's going to power those. And now even yesterday, Simon Moore from Benchmark testified to Canada's House of Commons Committee for Natural Resources, along with my Vice President, Liz Lappin, talking about the critical minerals shortage that they're predicting and how Canada can be a leader in that. And we absolutely can, because even in Alberta, we have cobalt, nickel, and hopefully soon lithium.
Right. Okay. I buy all of that, but that's a kind of like all companies say that. Okay, they're beating that drum. You've got to beat that drum. Yeah. But $600 million is $600 million. That's a tough call. 3 months ago, you were a $40 million company, right? So attitudinally, I guess things will start changing internally. You're 160 million market cap, still undervalued according to you. So you've got a ways to go. People will start paying attention, but $600 million for anyone is a ton of cash. So have you thought about how you not just approach the market for money, but how you talk about the full chain that you're going to talk about? ESG at one end is great, but how do you sell into the market? Have you got the people on board to help you understand how you integrate into the market, where you position yourself?
Yeah, absolutely. I mean, funding this is going to be a big job for the company, and we're probably going to start that work in about a year in terms of going out and actually bringing the funds in. And that starts with the production of the pre-feasibility study. So the next 12 months, that's the goal, is to get the pre-feas out. That's really the document you can start taking to banks effectively, right? And start shopping the project around for funding. We're already in discussions with those groups to get them intro to the story. This is how this works. You know this as well as I do, probably better, about, you build those relationships over time. I think that there's going to be a solid amount of government grant funding that's going to come to projects like this. And also, the strategic is obviously a big, important part of that. And that can come in lots of different avenues. One of those is offtake. And I think that's where you're alluding to, where are we going to sell the product? Likely it's going to be pre-sold offtake agreements. And those generally in the market that we've seen in the past have come with capital, either pre-buying the product or some investment or something like that to lock in that long-term supply. And I think that with the way the market's going, there's going to be a demand supply crunch in the short term. And it's going to happen right about the time that E3's project comes on stream. And I think that's going to be advantageous for the company, because we're going to be able to attract those offtake agreements from the major, purchasers, major battery manufacturers or cathode manufacturing companies. And that will assist in the funding of the project as well. And that you could call that a strategic relationship as well. And that if you're going to a bank, you need security, right? You need some way to back up the debt that you're going to have to, because we'll probably finance the majority of this with a debt equity. So, but you need some sort of security, down payment, and that sort of thing. So part of it will be cash. When you look at our market cap, you're right. We just moved to around a 250 million Canadian market cap. That's still growing. Look at Lithium Americas Corp. They're worth $3 billion. There's other companies on this panel that are worth in the, $500 million to $1 billion range. So I think that we will still accrete value over the next 2 to 3 years into that sort of realm as we grow and as we get closer to production. And that'll increase our ability to raise larger capital on the market to fill the gap. And then you add a strategic partner that either brings an offtake agreement with secured purchasing of your product. That banks really love that. It gives you the ability to demonstrate that you have a purchaser long term. And I think a combination of all those things, and probably we don't need all of them, but a couple of them. And so the strategy is in place. But until the pre-feasibility is out, it's hard to shop that. So we're building the strategy today. We're building that team today. And then once the pre-feas document is available to start sending to these companies, we'll be out on that sort of, marketing round, is finding securing that funding.
Okay. You see, the bit that really intrigues me is, like, again, we speak to a lot of companies. We're all talking about raising money into a supply demand deficit, and the timing they're all talking roughly the same timing. Plus there's all the incumbents, all of those guys sitting there with cash in their bank, with production and the ability to ramp up, all accelerating into the supply demand gap. And if we look back to 2017, what happened? there in terms of, we saw that spike then and it fell away as quickly as it came, right? So I think it's important for guys like you to have a view of the market, where they sit. And that's why I asked where you position yourself. Do you do a 600 million CapEx project, right, which is tough? Do you start with something smaller? Do you, first of all, find a strategic partner, like real quick, accelerate into getting a strategic partner quicker, because that offtake is important. If it's 25%, 40%, 60%, or 100% of your offtake, you've got to have a view on how you approach positioning yourself in the marketplace, because there's going to be competition. There always is. Yeah. And what do you think that's going to do to pricing, and therefore how do you compete in that environment? So there's a lot of moving parts, because it's not, And
I think that with any company at this stage, in my experience from having done this before, is that it's a bit of a shotgun when you're at this stage, right? Right now, you're approaching every angle with a concerted effort. You don't need all of these to pay off. You don't need to necessarily get a strategic and get an offtake right, and all of those things get government financing. You just need one or two of those to finance the project, right? And if you do a good job, and you build the project and you build the company, the value does accrete, and that does increase your ability to raise a market. So 100%, the company is at the stage now where we're the shotgun is sort of going off in that sense. And that strategy is in place to talk to everybody. There's no one that's not on the table that we're not talking.
No, I get that. But again, it's like, everyone's talking all the time to all people, and all options are on the table. I'm just wondering, in your head or the board's head, is what are those two or three things which you prioritize above everything else? Because if you get those right, you've got it made. Yeah,
I think, with the right strategic partner coming in at this point, that's one angle. The timing of a strategic partner, though, is very critical, because once we get the pilot completed, which we are now fully funded to do and fully staffed to do, the value of E3 should continue to grow, and our negotiating power just gets stronger as we get closer to the pilot. So there is a timing aspect to this that we are very cognizant of, but 100%. It is a lot easier to build a project when you have a big company with deep pockets backing it, and 100%. And so, we are, like I mentioned at the beginning, we are in discussion with several strategics in that avenue today, and we will continue those discussions. And we're continually increasing that sort of breadth. But we are, in that angle, we are being very strategic, because we're not going to just anyone for that type of relationship, right? We've developed a very strict framework by which a strategic needs to fall into for us to be interested. They have to bring something to the table specifically that E3 is looking for. For example, the ability to help us fund the capital construction is at 100% one of the key criteria, right? So that sort of puts you in a size paradigm of the strategic that we would be shopping for right now.
Beautiful. Okay. And we mentioned earlier with the Livent deal, it was the right deal at the right time. Okay. And looking forward, you've got to take a view of what the right deal would be now. So would you be prepared to give away a little bit more now than you'd want to be able to put yourself in a position to compete, in the 3-year, 4-year, 5-year window? Because that's when everything seems to be coming down the line. Everyone's talking that language. So again, I know you know this, but just want to hear you say it.
Yes, I mean 100%. If the right partner with the right deal came, of course we would work with them 100%. And that's the goal right now. Like we're not necessarily pushing people away. We're being very strategic because we have time on our side. With the Livent agreement, the company was having a very hard time raising capital, therefore a very hard time hiring people and attracting expertise to it. And now we're in a very different position. So, we have time, we have capital to do what we need to do without bringing a strategic in. So, that means that we can be patient. and we can do the deal with the right company that brings the right things to the table. And that's all I'm saying. So, 100%, if that came, we would act on it, and we'd bring that, because you're right. Once you have that secured in some sort of relationship, it does de-risk a lot of the back end. How are you going to raise? People aren't going to, if you had a major company backing you, people stop asking you the question, well, how are you going to raise 600 million? And the reality is that you're right. Like, if E3 went it alone, which is, like I said, it's not really the priority, but if we did go it alone, the project may be smaller. We might start at 5,000 tons or 10,000 tons and reduce that capital burden initially, demonstrate it works, and then use that as the collateral that you need to go raise the rest of the debt to sort of finance a expansion to that and grow to 20. And then, because the project that we have, we've outlined 600 million to start at 20,000 tons, but as the market continues to need more lithium, and as we get this project, generating revenue, we plan to expand to probably close to 150,000 tons. And it's a lot easier to do that when you're generating revenue. And those discussions become very, very easy, right? Because you're not demonstrating anything. You're just pointing to your project and saying, we have this operation here. Here's where we are today. Let's grow this now.
Yeah, I think, I'm glad to hear all of the above. It just shows a sort of agility of thought, flexibility of thought, because again, we've interviewed companies that have been grown quickly, got a kind of arrogance to them, and not taken the deal on the table, which has damaged them in the in the medium to long term. And it's always worth understanding how the board thinks about these deals today for the benefit of tomorrow, when you've got to balance risk mitigation, dilution, all of that stuff that you have to deal with as a CEO. Can we just talk very quickly, finish this off actually, on the zero carbon flow sheet? Okay. Yeah. Again, I've spotted a few pages on it in the PowerPoint. It's kind of interesting. You've got pictures behind you, which seem to be green fields, but in there somewhere is you working away. with
that one there.
Right there, right?
Yeah.
So it's hard to see where you are. There's not big sort of ponds and in salars, and there's not, tabletops being shaved off to get access, hard rock, etc. It looks very green. So how green is it?
Yeah, I don't like the term green because people greenwash. So this is why for us it's fundamental that we get out the LCA, life cycle analysis, third party, so that we can actually show someone a document that says, here's a third party company that has demonstrated how we're actually going to do this. So, but it's on 4 main sort of avenues that we're going to be, quote unquote green, or what we call reducing our ESG, right? And having a fundamental strategy behind it. The first one is, and I think the most paramount, when you're looking at the EV market and where everyone is talking about the carbon footprint, absolutely everybody. And they realize now that it's not just what comes out of the exhaust pipe, it's also what goes into the product. And the batteries are very carbon intensive. So how do you reduce that? And for us, there's 2 ways. One, if you look at the picture down here, it's hard to see from what you're seeing, but it's on our website. The project sits below a 80 meg wind farm. So in Alberta, we have a huge ability to generate renewable power. Now, renewable power is not 100% reliable, and with a process, you need to have reliable power. So that will be backed up with natural gas power generation facility. We have lots of plentiful natural gas in Alberta. It actually helps the local economy, which is great. And out of that exhaust gas from the gas-fired power plant is 3% CO2. So what we do is we sequester that CO2, we take it out of the exhaust gas using a process that's been developed here in Alberta, and we put that CO2 and compress it into our waste stream. So keep in mind that we take the brine out of the ground, we put it in a pipe, we bring it to a full process facility, we extract the lithium out, and then we put it back into the aquifer. People are putting CO2 into this sort of waste stream, into this exact aquifer, 10 kilometers down the road. So this is not new tech. This is something that is in operations today in Alberta. So it's not a pipe dream. It is a reality that we plan to deploy. So that is absolutely number one for us is to get the zero carbon emissions to zero or near zero, right? Then when you look at this from a process operations, the fact that we do use wells and pipes, and we use the direct lithium extraction means we don't have tailings. We don't have a pond. We don't have an open pit. We don't have a tailings pile. Everything is very small and compact. It's 3% of the land use of relative to a Salar hard rock mine. So very, very small surface footprint for this. And the other piece of the story is that we don't use fresh water. We actually are a net producer of fresh water because the last piece of the process, keep in mind, we're moving lots of salty brine, but the last piece of the process is using a crystallizer to crystallize out lithium hydroxide because it's a salt effectively, right? And that process produces a clean water stream, and that's net to the project. So we actually make fresh water that we can provide to, you look at those pictures, they're farmers' fields, right? So we can provide them to agriculture, provide the water to agriculture, to ranching, to local community, to use for their use. So, and it's inherent to the way that we build this project. So we don't have to add a lot of capital. We don't have to zero tailings is inherent to the project. We're not designing it specifically to be zero tailings. It just is because of how the process works, right? So we check all these boxes largely without having to put any additional effort or energy into the project.
Right. Okay. The thematic is continuing. So the EV thematic is continuing. I won't say green. I'll say clean. Clean.
Well, yeah. I mean, zero carbon is the best one to use because that is our goal. Is to reduce that footprint to zero. And it's a huge push from the federal government here in Canada to develop projects with a zero carbon footprint. And I think that's why, we have some confidence that we'll be able to attract funding for specifically that angle as well, right? Because they are out there today funding projects that can deploy technology to go zero carbon. And that's what this would be. We'd be deploying a piece of technology called carbon sequestration, and we'd be adding it to the process, and that we could likely fund through federal funds to get us to that zero carbon.
Yeah, absolutely. I think we've seen that in a few other places too. Question on the technology then. You're going to be a lithium producer, okay? You're producing lithium hydroxide. That's the end product, right?
Oh, yeah.
Right.
Yeah.
And which obviously, nice margins associated with that. You've also got a technology there, but I think you've been given some clues there because one of the questions sent in was, will they be selling the technology?
Mm-hmm. Absolutely. That is the potential for E3. So one of the benefits to now bringing the development in-house, it was in Livent's facility in North Carolina. It was in our facility in Kingston, Ontario. Now that's all locally in Calgary at our facility here, staffed by our own people. One of the benefits to having that now in-house is that we can test and develop other people's brines. And so, we talk about building this prototype, basically an in a lab version of the pilot that we will be able to use to obviously test our brine, but we'll also be able to use it to test other people's brine. And so that is a goal for us. And we already have a list, right? So that's finding people that want us to test. There's not a plethora of brine projects out there that have the ability to produce the fluids that would make a commercial project. But there are some out there. And so, it's 100% something the benefit to it is that it could generate revenue for the company sooner than putting our own project into production. Especially if we're just going to deploy it for a royalty or, some sort of sale of the licensing sale of that technology. Then someone else has to deploy the capital to put it into practice. And, we can just collect a royalty on it. So.
Okay. We'll put that down as a byproduct.
Yeah, exactly. Look, at the end of the day, though, producing lithium hydroxide with the way the battery market is going, that's what creates the value, right? The technology, although, does create value for a company, and there are other companies like even Standard Lithium, they are just a technology company that is joint venturing into a project. where we have the technology and we have the resource. So we're developing our own technology for our own resource. There is obviously therefore value, right? Because Standard Lithium only owns 30% of that project today, and they're worth significantly more than E3, right? They're obviously more advanced as well. But it demonstrates that technology is value. But I think that at the end of the day, when you look at it from an enterprise value perspective and a total potential growth of the company, having what we have, having a resource that we deploy our own technology to, that we're not paying royalties on, that we can, expand and grow our own production. At the end of the day, E3 will have a much bigger enterprise value than those peers, technology producers, I guess.
Yeah, okay. I just want to ask that question because it could be considered a distraction unless you very quickly work out how to monetize it. I guess you'll work that out over the next few months or so. Chris, brilliant run through. We've not met before, spoken. I've enjoyed listening to the story. Exciting phase of development for you guys. Should be exciting year.
I think 2021 is going to be the biggest year for E3. We've got a lot of things on our list. If you look at our PowerPoint, we've got a development plan outlined. That a lot of those things we've been wanting to do for a couple of years now, and being completely fully funded, and the ability to go all the way to the pre-fees without having to go back to the market puts us in a very, very good position to accomplish all of these goals and grow value for this company.
Beautiful. Look, stay in touch. Let us know how you get on. Be delighted to speak to you again. Appreciate your time.
Absolutely. Thank you.